Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. I wanted to start off by clearing up a couple of things. So at the weekend's video, there seems to be a lot of confusion regarding what is written in yellow at the top of this melt-up chart, where I was saying that I suspect Congress might be banned from owning stocks at the top. And a lot of people seem to think that what I was suggesting is this is a necessary catalyst or even a catalyst at all, and I just thought I'd clear this up. This is by no means, according to me, a requirement or a catalyst of any description. This is simply something I expect to see, and the reason I say that is because we saw it back here with the Fed officials, okay? Once we got into this neighborhood, they came out and they said, we think it's un-American and we think it's unethical that the Fed get to essentially insider trade with no repercussions. And so they passed this bill that prevented Fed officials from trading stocks, and it just so happened that shortly thereafter we went into a bear market. Okay, so that is what it is. It's just data, it's just the facts, and thus I'm just simply saying that I wouldn't be surprised if the same occurs here. Right now, if it doesn't, I don't care. It doesn't matter. It doesn't change anything. Ultimately, the sell signal, as always with any sell signal on this channel, will be trendline breakdowns and confirmation via failed cycles. So by no means am I suggesting this is a catalyst or a requirement. It's just something I expect to see repeat. Like I said, they did it with the Fed officials here. It just would not at all surprise me if they did it again with Congress. And since then, of course, there's been plenty of things in the news about them passing bills and potentially looking to do it. They have a very long history of suggesting this and then not actually acting on it. So I'm certainly not ruling out that nothing will come of this and it's all just talk and they just continue to kick the can down the road. That's entirely possible. But I'm simply saying it just would not surprise me at all if we saw them do the same thing as they did with the Fed back here at the next top, whenever that top should occur. The next thing I wanted to address is downside scenarios. Some people have been saying that, oh, Camel, you don't even have a downside scenario. I do. I've got plenty of downside scenarios. Some of them are quite mild, like we just roll over one more time and then we try to come out of here and build a base. Some of them are, you know, the worst case scenario where that is the top. Bitcoin's top is already in and we're going straight down. Okay, and I have a couple that are in between. And it's not that I'm not aware of downside scenarios. It's not that I don't have them. It's just that, frankly, people seem to struggle enough to comprehend the base case hypothesis. And if I then start to say, well, here's the base case, okay, and then, oh, by the way, if we don't do that, then we might do this. And if we don't do that, we might do this. And there's also a scenario where we go sideways. And there's also a scenario, right? If I start to add 2 or 3 additional hypotheses for what happens after this thing is invalidated, then it's just going to get far too confusing. The episode is going to get far too long. But rest assured, I have them, okay? And if or when we see invalidation via those trendline breakdowns, via those failed cycles, then I will present to you the downside risk. But for now, why fix what isn't broken? The current working hypothesis is yet to be invalidated. Like I said a million times, we know our invalidation levels, okay? And until they occur, then I really don't see any point in giving any energy to anything else. But rest assured, I do have them. It's just like I said, I don't really see the point in presenting to you 3 or 4 other downside scenarios when we just seem to be in up-only mode for now, at least. Another question I get all the time from people is, Camel, where do we hide if you're right about the melt up, right? If we have the melt up and the bust, then where do we hide in the bust? And again, I have an idea, okay, I have plenty of ideas. I don't think that's going to be the most difficult part of all of this. But as I often say when I reply to people that ask this in the comments, okay, we don't even know if this is right yet. Okay, it's a one day at a time situation. For all we know, that is the top. For all we know, the top is in for Bitcoin and what comes next is this. Okay, at which case, once we start to fail cycles, we'll be looking for confirmation and then we can talk about where to hide. But in the meantime, let's at least see if we can get that third and final angle set, okay? Once we're halfway through the third and final angle, then we can start to say, okay, this looks an awful lot like a blow off top. It looks like this call is correct. And therefore, we know that at some point a breakdown is going to come. And it's at that point, I'll be starting to talk about how I plan to hide in the bust, how I plan to short the top, or at least close to the top. I'll do my best, of course. I'm not suggesting I'm going to be able to pick the absolute top and short it. I'm going to do my best, as always, right? I'm just going to take it one day at a time and do my best. But for now, anything and everything, as always with the market, is still on the table, okay? We don't know if this is going to go sideways forever. We don't know if we're going to go something like this and then sideways. We don't know if we're going to do this, okay? We have no idea what comes next. As ever, we have to take it one day at a time. But yes, I have thought about it. I know where I plan to hide. Of course, we'll share that with you. But let's first not get too far ahead of ourselves, okay? Let's focus on setting the third and final angle if we can do that, okay? And if we can't take the left translated cycle off the table for Bitcoin, then let's at least try to sell the top first, right? Let's try to sell the top and perhaps enter some short positions. Once we've done that, then we'll have some tax to pay. Once we've paid our taxes, then we can talk about where to hide, right? So one day at a time, let's not get too far ahead of ourselves. And I hope you can appreciate that if I was to start to talk about where to hide now, we want to be long leveraged treasuries and I want to have some dollars. I want to have stuff that carries no counterparty risk like physical gold. If I start to talk about all of this, okay, and we don't have a blow off top, right? What if this is what comes next for a decade? Just this. Then all of that is just wasted time and energy. It's all wasted content. It's your time wasted as well because you're sitting there planning how to hide for a bust that has not even shown up, right? So let's see if we can set that third and final angle. Let's see, once we're in this neighborhood, if the writing is on the wall. And if it is, then we can talk about how to deal with that. And just before I move on, similarly, right, what if Bitcoin is going to right translate? Yeah, what if Bitcoin is not going to do this blow off top? What if it's going to do what it always does? Okay, and top at the end of next year, right? October-ish of 2025. Well, then we've got absolutely ages. We've got like 18 months of bull run left. And again, why are we talking about hiding from the bust if we've got 18 months of bull market left for Bitcoin, right? So as ever, one day at a time is the only way to do it. So today, I wanted to show you a couple of very interesting things, okay? Oil and the US 10-year is coming first. So here we have, in green, US oil, and in red, we've got the 10-year bond yield. Now, obviously, in this neighborhood, it's pretty easy to see that they are moving together. Then we get a top come in for both, and they both enter this downtrending period. They both, roughly speaking, bottom around the same time, and then start this uptrend portion. They also both, if I put in a vertical marker here, happen to top right around the same time and enter this downtrending period. Of course, we get a snapback here. Then between here and here, they tend to move down together in parallel, all of this, right? Then they tend to find a bottom sometime around the same time, rally up. And again, they top roughly together. Okay, the 10-year yield takes a little bit of time. Then again, you can see we enter a downtrend, we enter a downtrend, we enter a counter-trend bounce, a counter-trend bounce. And wholly speaking, it begs the question, doesn't it? Are we seeing oil at the hard right edge in green, thinking about leading the bond yields lower? Is this what comes next? Is this what comes next? Very, very interesting to me. And when I do the same thing with the 2-year yield, you'll notice the top for oil comes in and leads the top for the 2-year yield, right? The top for oil leads the top for the 2-year yield. The top for oil leads the top for the 2-year yield. And thus, it makes me wonder if we're about to see oil come off, which has been the base case on the channel for some time. Does this tell us that the US 2-year yield is also going to be led lower along with the 10-year yield? And of course, the reason why that is so interesting to me is because the US 2-year yield in green now has a history of leading the Fed funds rate, the interest rates, lower, okay? Every time the 2-year yield pulls back, it leads the onset of a cutting cycle in the Fed funds rate. So we've seen it every time historically. Tells me to be open to seeing history repeat once more, to seeing that 2-year yield perhaps follow oil to the downside and thus see the onset of the cutting cycle far sooner than most people are currently expecting. And of course, at the hard right edge of the 2-year yield, if I move this out the way, okay, so far, that is a breakdown. Now, it's got some work to do, admittedly, but like I was saying, very, very interesting that we might be seeing the bond market about to bully the Fed into cutting interest rates. The next thing I wanted to show you was a very, very interesting chart, which occurs when you divide Bitcoin by the US 10-year yield. And so here it is, okay? Bitcoin USD divided by the 10-year yield on the monthly on a log scale. And what do you notice? You'll notice that every historic top, okay, was called by a touch of the upward sloping channel, okay, in blue. So is it as simple as this? Does that tell us that when Bitcoin priced in the 10-year yield reaches the top of this channel that we can expect to see a major top come in for Bitcoin? It worked the prior 3 instances, so certainly something I want to keep an eye on. And fitting on with this theme of dividing risk assets by bonds, when you divide the SPY, the SPY, by TLT, we are currently right into an area of major resistance. This whole thing makes me wonder if what we're going to see is some kind of a throwover and then the end come in. That would certainly fit the base case hypothesis on this channel. We also have a very overheated RSI at the bottom. Of course, that does not mean this can't continue for some time longer. But again, these are the sorts of things that potentially can provide an edge. Of course, the last time we touched this channel was back in 2007, 2008-ish. And of course, we know what comes thereafter. So a couple of outside the box things to look at. Of course, if this were to break down, it would imply that TLT is significantly outperforming the S&P 500. And continuing on with this manic Monday of hopping around, are homes expensive? Because as a percentage of income, mortgage payments have not been this expensive since the early 1980s, over 40% of income. Here's the thing, cutting rates won't necessarily fix this because cheaper rates could easily result in house prices going up even higher, negating any relief from mortgage rates. The buying power of the dollar is declining, your income is not keeping up with inflation, and cutting rates doesn't fix this. So have a look here, okay? At the hard right edge, mortgage payments as a percentage of income at very historically stressed levels. And of course, significantly above the 32% average. And fitting in with this theme, the cost of buying a home in the US has risen to $2,750 a month, which is the second highest ever recorded. Prior to the pandemic in 22, the average home in the US would cost just $1,400 a month. And if we hop in and take a look at this, okay, it doesn't take a genius to look at the hard right edge and say something has probably got to give in the not too distant future. That's at least my humble opinion and my current read on this. From the housing market to the stock market, we are still currently sitting in fear territory with the S&P 500 trading just 2.5% from new all-time highs. So again, this speaks to that wall of worry. It speaks to the cycle lows doing what they're intended to do, which is reset and flush the sentiment out, ready for the next leg higher. This is a big part of why I think we are going significantly higher, because during the good times, okay, bulls get very bullish, but it only takes a small, shallow, quick and sharp pullback to turn those bulls into doom posters, the end of the world is coming, and for all of their conviction to be completely slashed away. That is not what market tops look like. Market tops look like when we get a pullback of 4, 5, 6%, people can't wait to rush and buy everything hand over fist because they are in extreme greed and euphoria. This is not what we're seeing at the moment. There continues to be a wall of worry to climb, and that tells me that we have got plenty of legs left in this rally yet. And in historical context, okay, this bull market is still extremely young. It's not even 19 months old yet. And should it end now, that would be the quickest and weakest bull market ever. The average bull lasts nearly 5 years and gains more than 150%. This one is only at 43% and is just over 18 months old. So this goes completely against the melt-up idea, right? This tells us that we've got plenty of time left to go, plenty more upside to have for multiple years. Again, shows the importance of being open to all possible outcomes. And of course, continuing to take this thing one day at a time, not getting too far ahead of ourselves. The VIX 10-day rate of change, okay? When it goes above 40 in the bull, then retests to minus 20 or worse, the S&P, which is in the bottom panel, forward returns positivity rate is 95% 3 months and 6 months 95% as well. So if we pull up this chart, we've got the VIX at the top, right? We've got the rate of change of the VIX in this middle plane, and we've got the S&P 500 at the bottom. What you'll notice is when we get this big snapback in the rate of change, it coincides with big bull runs, big explosive upside moves for the S&P 500. Since we have that at the hard right edge, it tells us to keep an open mind about continuing to see more legs in this bull yet. And Bitcoin continues to do Bitcoin things, okay? A lot of people are calling for this thing to be sent back turbo, just like we did in 2017, okay? Send it back turbo, just like we did in 2021, send it back turbo. Is it time, okay? Have we seen enough? Is that enough of a pullback? I'm seeing some people say, is the bottom in? Is that a cycle inversion? And we're going to get to the charts, and I'll just give you my thoughts in one moment. First of all, okay, not much has changed since the weekend's video, so this shouldn't take too long. The Dixie is, in my opinion, working on a daily cycle low. Once it's found a swing and a reversal, then we can set wherever the low forms as the first early warning sign. Okay, so if we come out of here, make a bounce, and then continue up, the moment we lose that low, we've got a failed daily cycle, and it tells us to keep an open mind about seeing downside. That would be a first early warning sign. the big thing for me is there's no way this thing breaks down without losing this upward sloping blue support. So all the while we're above that, I continue to be bullish bias. The other update I wanted to make is gold. Gold looks like it's thinking about breaking out. And if it can, then it means we've forced a slightly later than expected cycle low and are looking to resume up. I don't want to confirm that count just yet because the market needs to prove that to me. But if we can continue to get a push off out of here and start to make another leg up, then stops can be moved up, more profit can be locked in, and those positions that we've got in the miners and other things like stocks relating to gold in the members section can also have the same. They can have more risk taken off, more profit locked in. So encouraging signs now, but not quite seen enough follow through. However, it's even more encouraging when we click onto silver. Okay, silver looks to want to lead here. That's very, very bullish. So far, so good for the precious metals. Of course, for the stock market, there's still a bit of work to do, right? We still need to make sure that this breakout of the downward sloping blue holds. We don't want to see this thing fail, roll over. We certainly don't want to see a loss of the upward sloping red support line. And if we were, that would set us up for a failed cycle trading below the prior cycle low. If we do that, okay, then something else is going on and we need to entertain some downside scenarios. All the while we're above this downward sloping blue and this upward sloping support and the cycle low, then the thing is bullish and I continue to expect higher prices. For the NASDAQ, we are looking to confirm by breaking out this downward sloping blue resistance line. If we can do that, okay, happy days. Start to lose the upward slope in here or the cycle low, and it should tell us to keep an open mind about seeing much lower numbers. The Dow Jones looks pretty bullish for now. Probably going to get some kind of a backfill of this gap, I would have thought, and then hopefully we can finish the week higher up. For oil, I am looking for that cycle low to come in any day now, okay? So like I said in the weekend's video, I don't want to go short in here because we're so close to a cycle low. So I want to find a cycle low, get a bounce, failed cycle, enter short on that failed cycle. And the reason that I want to see that setup is if I just get short now, there's no saying that we won't find a cycle low any day now and then come rallying out of here, break out and start a big bull run. So going to let the setup come to me, a little bit more patience will go a long way as always. As I was saying earlier, it's going to be super interesting to see if the bond yields can be led lower by oil. So can we get a breakdown on the 10-year? That's to be determined. The US 2-year yield, starting to look a little bit like this may well be in play, right? So again, very, very, very interesting times, particularly because of the implications this has for the Fed funds rate. And keep in mind, no one, and I do mean no one, is expecting to see the Fed cut rates as early as July. So this is a very, very, very wild time to be alive. Things are starting to heat up. Things are starting to get very, very interesting. And I've kept you waiting for long enough. Let's take a look at Bitcoin. So undeniably, this is starting to get people excited, okay? Is something like this in play? I wonder if we're going to do something like this, okay? And then get a push off. There's always a chance that we've confirmed a early cycle low, something like 42 days. That is always a possibility. Certainly cannot rule that out at this time. To me, 42 is a little bit early. It's a little bit premature. So I wonder if what we're going to see is some kind of push, right? Pull back into a cycle low and then go. Perhaps something like this fractal can be in play. Either way, okay, I've traded enough cycles. I've seen enough cycle lows to know that the thing I want to do is put the balance of probabilities in my favor the most, and the only way I do that is by waiting until I got a full daily cycle behind me. Continuation up through 69.70 would probably let me know that perhaps we forced a very early cycle low. But for now, at least, I think even in the most bullish case, we'll get some kind of a bull flag. We could buy the cycle low out of here and then look to take this rally higher. And from a cycle perspective, it tells us to keep an open mind about seeing one final rollover, something like this. So it's got some work to do. As ever, I'll take it one day at a time. I'll be ready to pivot if the market tells me so. That's certainly an early and encouraging sign from Bitcoin that we've got to break out this downward slope in blue. But like I said, the cycles remain down for around another 12 to 14 days, something like that. So again, a little bit more patience should go a long way. Other than that, welcome to the week. Welcome to Monday. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.